You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The futures markets can be downright scary. Limit up, limit down. What the heck is RBOB anyway? Are they going to dump a truckload of soybeans on your front lawn if you click the wrong button? Come to think of it, maybe you should just stick to your comfort zone. Or you can break out of it with the Futures Rundown. The Futures Rundown is here to help you make sense of these scary markets. We'll analyze all the top futures trading activity, explore the ins and outs of your favorite products, explain exactly how futures work, and hear from leading experts in the futures markets. We'll even tackle all of your wildest futures trading questions. If it involves futures, then you'll hear about it on the Futures Rundown. And now, it's time to break into the futures markets. It's time for the Futures Rundown.
All right, everybody, that music means it is Wednesday. It is time to talk a little bit of futures. Yes, it is time once again for the Futures Rundown. My name, of course, Mark Longo from the OptionsInsider.com, as well as on the network upon which all of you folks are enjoying yourselves. At least we hope you're enjoying yourselves these days. Remember, if you're not listening to the full network, make sure you're checking it out wherever you get your favorite podcasts, including on the old tubes. A lot of you coming in these days over there as well. We don't judge. However you want to get it, that's fine with us. And then, of course, if you want to go above and beyond, you want to get awesome exclusives, you want to get live access to shows. Like if you're on the Pro, you already heard last week's Options Bootcamp, which sounds like it's going to be the Thanksgiving Eve episode for next week. So you already heard that. You're going to hear it 2 weeks ahead of time. All sorts of other exclusives, the awesome Pro Q&A we just did with our good buddy, the options market wizard himself, Mr. Tony Saliba, as well as a whole bunch of other fun exclusives. The optionsinsider.com/pro is the place to go as we dive into the trading pit for our Just the Facts, Ma'am episode this week.
It's time to break down all the action that's lighting up the futures markets this week. What's limit up and what's crashing and burning? Let's find out. It's time to enter the trading pit.
All right, everybody, welcome to the Trading Pit, the portion of the show where we break down what's lighting up the tape this week and indeed today in the world of futures. Let's start looking at our trends for the week. Let's go to the upside. Let's keep things positive because why not? It's been a bit of a tumultuous market this week, listeners. Let's keep things in the green, shall we? A number 5 to the green so far this week. We got our old pal U.S. Midwest Steel up a little over 2, about 2.02%. So it doesn't cost you much to break into the upside this week, listeners. And then to number 4 to the upside, we go to oats, our old pal oats, listeners. Coming in again, number 4 up 2.04%. So slightly, just ever so slightly, taking it from the number 5 spot out there. And then we've got number 3 going out to good old USD New York Harbor, aka heating oil, for all of you out there who are not familiar with CME jargon. So heating oil coming in at number 3, up 4.62%. Number 2, again, this one moves around a lot, let's just say. So this is just a snapshot. This is our old pal, the VIX. Obviously, the VIX vol getting a little bit spicier this week on the heels of some downturns in the broad equity markets. The VIX futures, as we kicked off the show today, up nearly 10% this week, 9.8%. Again, I know there's a whole debate of percent of what is already a percent number. I get it. We're just giving you the hard, raw facts here, listeners. Number 2, VIX. And number 1 this week, an asset class we don't have a chance to talk about that often. It's lithium, up nearly 17% for this week, 16.95%. So some wild action in one of the EMs, perhaps not the one you expected. All right, to the downside we go, listeners. These are some wild downside numbers. You might hear these and think, are these for the year? Nope, this is for this week, listeners. So wild stuff. A lot of red on the screen this week, including number 5. We go out to the land of the physical once again. It is lumber, giving up over 7% for the week, off 7.2%. We've said it before, we'll say it again. Lumber, kind of an unheralded asset on the vol side. It was probably the most volatile asset on the planet back in the mad year that was 2021. Everyone was talking about meme stocks. Everyone was talking about crypto that year. Everyone forgot about lumber, but it was probably more volatile than all of them combined. Wild stuff in lumber, giving up over 7% just this week for the number 5 spot. Number 4, we're going to cocoa, listeners. Cocoa off 11.33% for the week. Again, these are sizable downside moves for the week. Number 3, not a move a lot of hodlers wanted to see this week. It's Bitcoin, both the big and the micro futures over there in CME land, giving off a little over 12% on the week, about 12.1%. So the big dog BTC coming in at number 3, a little bit smaller this week, breaking through 90K recently after already breaking through 100K, a very important psychological level. Now 90K, starting to spook some folks. Number 2 to the downside, our old pal OJ. I just don't think OJ can't possibly sell off anymore. It gives up nearly 13% in a week, 12.6%. And then the big dog to the downside this week again. Not a number or an asset a lot of people wanted to see on this list. They were having a good time championing its just meteoric rise in Q2 into Q3. What are we talking about? It's Ether. Ether, it's only a short trajectory for this show so far, just a little over a year. But so far, Ether has done the most living by far of any product we've talked about on this show. I mean, gold's had a nice run. It's been to the upside, but that's it. It's been up, it's been up, it's been up nonstop all year. ETH was in the toilet to start the year. One of, if not our worst performing asset for the year. Went all the way to the top of the other side of the list, where it was our number 1 best performing asset of the year. And now starting to turn back to the downside, ETH giving off a little over 15%, about 15.2% for the week. So that's a rough one. That's a bit of an ouchie. We'll keep an eye on all things crypto, obviously, as we keep on rolling out to the pits and see what's active out there. Is it an active day? And you know what? Lately, a little bit of these dust-ups in the equity market, and of course, the commensurate sell-offs we're seeing in assets like crypto and others have driven a lot of volume, and also the tremendous intraday action we're seeing in terms of whipsaws and huge 50-handle runs in the S&P before turning around and whipsawing in the other direction. All that's going to drive a lot of flow. Is that doing so today? The answer is most decidedly yes, listeners. We talk on this show about using 300,000 contracts as our rough barometer, our line of delineation, if you will, on what is a busy day and what is a not so busy day. Today is a banger, listeners. Cost you 483,000 contracts to break into the top 10. That's right, when the show started. It's probably over 500,000 right now. That gets us to our old friend, the Ultra T-Bond. And once again, we are all Dece all the time in our top 10. So don't you come in here asking anything about Nove or Jan or Feb. None of that. We'll hear none of that today. It is all Dece all the time. Ultra T-Bond number 10, 483,000 contracts. Again, that's what it cost you to break into the top 10. That certainly ain't nothing. As we get to number 9, it's the Ultra 10-year, 600. So we're already jumping from 10 to 9. We're already at 600,000 contracts. There are many days where we're at number 4 and not even sniffing 600,000 contracts. So that's kind of wild. Number 9, Ultra 10-year, 603,000 contracts. Number 8 is the NASDAQ 100 E-mini, our old pal, the NASDAQ E-mini, coming in 627,000 contracts for the number 8 spot, listeners. All right, to number 7 we go, listeners, and spoiler alert, probably going to be an equity or a rate today. And the answer is coming in on the rate side. Number 7, 3-month SOFR. Number 7, already 869,000 contracts on the tape, listeners. That is That is wild paper for number 7. Number 6, keeping in the rates, it's the 2-year 1.1. Again, we're not even in the top 5 yet. We're already north of 1 million contracts. That's how you know we're kind of in banger territory. It's the 2-year 1.1 million contracts on the tape. Now to the top 5, listeners. What does it cost you to break into the top 5 today? Oh, only 1.5 million contracts. There are many days where the top of the list, the 10-year, doesn't even get to, certainly not 1.5, maybe 1.2 million to top out the day. Nope. Number 5 today, the S&P 500 Micro, 1.55 million contracts, followed by number 4, the big dog S&P E-mini, also 1.55. So just a few thousand contracts separating number 5 and number 4 today. Number 3, it's the 10-year, 1.63 million contracts. Number 2 is the 5-year, 1.85 million. And the big dog, once again, to the land of the NASDAQ Micro we go, 2.4 million contracts. Now, again, that's a micro, so take that overall number with a grain of salt, but my goodness. And also, even the 5-year, kicking the 10-year down to number 3 today, you know we're in some wild, uncharted territory when the 10-year is getting kicked all the way to number 3, listeners. That, again, shows you, if all the other stuff we're talking about here doesn't let you know that we're in some wild territory, then that should confirm it for you. All right, speaking of wild territory, this year is shaping up to be an absolute roller coaster ride of a year. How's it looking right now? Let's find out, listeners. Let's mix it up this time. Let's go to the dark side, because why not? Year-to-date losers, listeners. Going out to lumber first. Number 5, lumber, off 19.4%, so closing in on 20% to the dark side for lumber to the year, followed by number 4. It's our old pal rough rice, off nearly 27%, 26.88%. Big jump between number 4 and number 3 on our list this week, listeners. Number 4 is rough rice, off nearly 27%. Number 3, it's cocoa, off over 40%, 40.25%. You're saying, what could possibly top that to the downside? How about our old pal cash settled butter, off 43.6% year to date. So if you're down for a little bit of cocoa and a little bit of butter on your toast in the morning, then your breakfast could be looking a little bit cheaper maybe. And then speaking of breakfast beverages, the king of the downside for the year, our old pal OJ, off nearly 66%, 64.75%. My goodness. Just when you think OJ can't get any cheaper, they just keep slaughtering it. So I guess on the breakfast inflation front, OJ and butter fighting the good fight for you, listeners. As we keep on rolling to the upside, you could probably guess there's a whole bunch of shiny stuff on here, but one that is not. What do you think it is? I'll give you a couple of seconds because it's coming in at number 5. 3, 2, 1. Can you guess? Yeah, it's coffee. Up 34.25%, listeners. Coffee has been kind of one of the upside stories for the year. That isn't in the metals. And it's also been a pain point, I know, for a lot of you out there who like the occasional bit of Starbucks. So, yeah, been a rough one. The good news is it's not up as much as it was. So that should maybe be some solace to you. Number 4, it's our old pal gold, still up almost as much as it ever was. A gold up, not quite 50%, but pretty darn close, 47.5% for the year. Again, just a wild run for the shiny stuff. But we're not done, listeners. To palladium we go. Number 3, up 50.5%. Followed by number 2, keeping it in the P precious, it's platinum, up nearly 66% for the year, 65.99%. And then just a smidgen, just a hair separating the number 2 and number 1 spot on our list this week. Listen, number 2 is platinum. Number 1 just managing to edge it out. Werewolves beware. It is silver, up 66.75%. You're really splitting hairs now between that number 1 and number 2 position out there. So wild stuff. It's been a good year in general just to have metals in your back pocket, and not been a great year to be cripplingly addicted to Starbucks, listeners. But you know what we're also addicted to on this show? It's a little bit of your questions. So let's get there now.
Ring the bell. It's time to take on all comers in an epic Q&A battle royale. All questions can enter, but none can leave without an answer. It's time for the Futures Free-for-All.
All right, everybody. Let's get down to business with some of your questions. We always shine a spotlight on you folks on our socials, so make sure you're following us on all the major platforms at Options. On most of the ones you folks use will get you to us, I should say, out there. And our question of the week right now is very much germane to this show because we're asking you, it's been a wild year in a lot of different asset classes, crypto, metals, equities, just to name a few. But there can be only one winner. Now, gun to your head, if you had to buy an at-the-money call, so effectively a bullish trade, listeners, on any of the following asset classes. Now, here's the caveat. Not for this year. You have to hold it all the way through till the end of next year. Which way are you going? We gave you 3 choices and the infamous other. We gave you Bitcoin, we gave you gold, we gave you the S&P 500, and again, other. We've had write-ins already for some wild things like December VIX, which you don't want to do that in VIX, listener. You don't want to ride VIX for an entire year. If you can't sell it, the whole point of having VIX in your back pocket is you can dump it when the big spikes occur. And in this case, you can't. So that does limit the utility of VIX. You have to hope that VIX is extremely bid at the end of the year next year, which is a highly uncertain scenario, to say the least. And usually December is seasonally not the strongest time for vol either. So you could have a good year and lose it at the end of the year. But I digress. Don't go VIX. But which way are you folks going, listeners? And it's kind of been an interesting toss-up right now. With coming into the start of the show, we have Bitcoin taking it right now. Nearly half of you, 47.4%, going for the old BTC, which is kind of interesting. Bitcoin getting a little bit beat up right now. Seeing Bitcoin taking the number 1 spot is kind of interesting, followed by number 2, a safe one. I put safe in air quotes, though, because can any asset that's already up 50% year to date be considered safe? It's our old pal gold. 36.8% of you going the gold route. Really interesting. Only 10.5% of you going the S&P 500 and about 5.3% of you going other. We got some fun write-ins, like I said, also including our old pal VIX. What is your preference? Or maybe you have an other. Maybe you want to go the 10-year. Maybe you want to do something else. Hit us up. Let us know. Give us a follow at Options if you haven't done so already. Then you too can play along in questions like this, which are very much germane to this program. Before we get out of here, let's go out to the live chat. We got a question coming in. One of our pro members, Mr. OG, the option god himself. A very timely question. We were just discussing this on the Options Bootcamp program just a little while ago, and it's been a subject of much fascination, I should say. Will the popularity of binaries eat into intraday futures volume? Sometimes it's hard to read that widget from across the studio here. I need to zoom that in or something for us. Let's get all that again. Will the popularity of binaries eat into intraday futures volume? A great question. Little quick aside, since we're talking futures here, I did just come from the big Futures Industry Association Expo in sunny and scenic Chi-Town yesterday. The big international gathering of derivatives traders, a lot of futures traders, as the name implies, in Chicago every year. And take a guess what the hot topic was. The standing room only session on the main stage. Yeah, it was these binaries, these prediction markets. So you're talking your Kalshis and your Poly markets and your Forecast EXs and now the forthcoming CME and FanDuel offerings and everything else. It seems like all eyes are squarely fixated on this space right now. They all see it as kind of the key to opening the derivatives kimono to a whole influx of new users who otherwise would never trade an option or indeed a future. But guess what? Maybe they will take the Chiefs plus 3.5. So it's interesting. It's certainly a contentious issue. There's a lot of debate on both sides, whether this is appropriate for financial services to even be going down this road. There's a lot of debate on the stage yesterday about where does that line of demarcation stand between what is a bet and what is a trade. Is there really that much difference between buying an out-of-the-money call on Apple versus taking the under, let's say, on Saquon Barkley rushing yards? You could argue that there is. You could argue that there isn't. There's a lot going on in that gray area right now, which is certainly interesting. Which leads me back to the question, will the popularity of binaries? There certainly is that possibility. There's a reason why CME is getting into bed with FanDuel right now. They see this as both a potential competitor, but also, and I made this argument to CME and to the folks at Nadex well over a decade ago when Nadex was the only regulated binary game in town. If it's done right, these binary products are very much feeder products to the big actual futures and derivatives products. A lot of people come in, they may dip their toes in a 5-minute binary on, let's say, crude oil. But maybe in the past, they would never touch a big WTI contract. But they start getting their feet wet in that product. They start developing a taste for it, a sense for it. Next thing you know, maybe they're buying some calls on WTI that go out more than 5 minutes. Maybe they're buying a week or a day. And then next thing you know, maybe they're trading some futures against it. So I've argued very much for a long time that these are very much the gateway products to the big boy financial derivatives products out there. And I think CME certainly sees that. A lot of other exchanges are chasing this as well. So there is certainly that potential to open the floodgates to a whole bunch of new users. Now, there's a lot of damage that could be done if it's not done correctly in the process as well. And a lot of reputational damage with things like gambling and manipulation. We're already seeing that in big major sports with, MLB or people throwing pitches who get paid tens of millions of dollars throwing pitches in the dirt. We have coaches in the NBA doing fixed games and things. So a lot of stuff that you wouldn't think would make economic sense, yet they're doing it. So it does open the door to a lot of potential manipulation. But the reputational risk aside, there clearly are a lot of new potential players. The question becomes, Option God and everybody else, do they just stay in the binaries? Are they content with, let's say, a binary on the S&P for 5 minutes or an hour or a day? Or will they then graduate to the 0-day options because they want a little bit more bang for their buck, a little bit more notional value, a little bit more exposure? And then maybe they graduate to a little bit of the intraday future side. So it's a very much an open question. One I haven't decided myself. I don't know if anyone has really. I think there's a lot of potential if it's done right to make these feeder products, which will in turn drive a lot of flow in a lot of other products. Or it could be just a disaster and there's a huge amount of reputational damage done and everyone just hangs out on the Chiefs plus 3.5 and they don't dip their toes in intraday lumber or WTI or other things. I'm hoping for the former, but I'm cynical enough to be braced for the latter. Great question out there, Option Guy. That's our pro folks, always on the ball with it. It might make a fun question of the week in some capacity as well for our audience. Where do we draw that line between a bet and a trade? And is that even an appropriate question to be asking anymore? Or if you ask the folks at Kalshi, everything's tradable. There's no line of demarcation. So maybe that's antiquated thinking. But either way, maybe we'll let our audience decide on this issue because you folks are a savvy bunch. That's going to do it for us on the Futures Rundown for this week. But we're not done. We'll be back after the closing bell, a little over an hour from now, to talk all things Thor. Yes, the son of Odin himself, a.k.a. the Hot Options Report. If you're intrigued by how all this red on the screen is impacting the options market, you got to check out Thor. Yet another reason why you should be subscribed to the full network. Then we're back again with our good buddy, the Flowmaster, again tomorrow. Talk some option block. Then the sister program to this one. This week in Futures Options, you can't really listen to one without the other. Well, you can, of course, up to you, but you're missing out on a lot of the context in the two. So make sure wherever you're getting this show, you're subscribed to the full network. And then we'll see you back here. Well, actually, we'll be off next week, I do believe, for the Thanksgiving Day holiday. So we'll see you back here in 2 weeks. Thanksgiving, of course, coming up next week. So back again in 2 weeks. Another episode of the Futures Rundown. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.